Hello everyone. We're going to speak about key trends for crypto institutions. I'm going to invite my panelists to join me over. Katalin, Dominic, come over.
Hey. Close to you, like so.
Swap?
Oh, no way. You're gonna be so
I don't
confused. Ants in the brain.
Let's not confuse.
All right, first things first, we're going to want to have some introductions. So who you are and what you do, starting off with Dominic.
Yeah, I'm Dominic Weibel. I'm heading the research division at Bitcoin Suisse. My background is actually in material science and aerospace engineering. And then I went down the rabbit hole a couple of years back. Yeah, I'm here for Bitcoin Suisse. I guess Bitcoin Suisse doesn't need a deep introduction. We have like more than a decade of track record. Swiss DNA, we operate a full service crypto agnostic platform across brokerage, staking, custody, peer-to-peer lending, and asset management. The research team sits in the asset manager. We're preparing quite a lot of exciting products right now. And the research team itself is covering everything from macro to crypto vanilla assets.
Yes, so just as Bitcoin Suisse, I would like to hope, especially in Switzerland, that Sygnum needs no introduction. Full service, one of the oldest crypto-native banks actually in the world, offering the full spectrum of banking services, accounts, lending, custody, staking, tokenization, brokerage, investment products, and also unicorn status now, one of the Swiss crypto unicorns, and myself 20 plus years on Wall Street and 10 years in crypto. So I'm of that generation that came into crypto with a lot of idealism, thinking that this revolutionary technology will change the world for the better, which, I think it might. Yeah.
All right.
And head of research at Sygnum.
Very good. Thank you for the introduction. So we're in a very good company. We've seen recently that central banks have started to cut. And there's more interest rate cuts on the horizon. We've seen also quite a lot of macro uncertainty out there. So everybody's asking now in crypto, are we risk on or are we risk off? What is your take? Katalin, want to start?
Yeah, I think I'm very clear on this and very positive. I think the environment the macro backdrop is very good for crypto over the medium term, obviously sort of short-term perturbations or black swans aside, for two reasons, and one is liquidity, which you slightly alluded to, and the other is instability. And the way I would put it is that bad news is good news. Basically, we see a global slowdown and more of that to come with the tariffs and also with the tariffs uncertainty. So it's not just that the tariffs slow global trade and hurt a number of economies, but the fact that we don't know how this is going to work out yet means a lot of companies are on hold. In fact, most of them or almost all of them delaying investments and so on and so forth, which in itself, the uncertainty in itself is slowing global growth. Central banks respond to that with stimulation. I think rate cuts, maybe when it comes to the US, are a little bit of a red herring. I think if the Fed cut rates, that would be counterproductive and negative. I think bond yields would go through the roof. It's more about a much more, because of the potential inflation that could come in the US. I think it's more about liquidity in a more holistic sense. And the reason why I think that's so very important is because since 2008, in my opinion, the system has been on life support and risk assets have the number one driver of risk assets has been global liquidity.
All right, so liquidity is bullish for the market.
Okay, can I just say just the other point is that the instability, which increases demand for safe haven assets like gold, all the instability. So for crypto, it's a double whammy. It's both the liquidity And then for Bitcoin, it's also the second driver, that the demand for gold, Swiss franc, and Bitcoin.
And we've also seen it in the past that actually even worse are good for markets. So markets tend to go up whenever there is some systemic event. And I would be interested to hear your take. Are we risk on or are we risk off?
I would say we are inching closer to full risk on. I would actually say we are a little bit closer to forcing the Fed's hands, to be honest. Yes, I sign up for this notion of global liquidity is improving throughout 25. We know Bitcoin is maybe the most sensitive liquidity sponge out there. Then we have the tariff overhangs are easing. Maybe there's some more volatility once we approach the July and August deadlines when it comes to these pauses. We saw two very lower than expected CPI prints in the US. And then I guess the Fed and Powell really don't want to avoid a policy misstep, especially since the housing market shows some forms of weakness. And also consumer confidence is not super bright, let's say. I guess the elephant in the room here is the looming debt crisis in the US, right? We know Trump's biggest mandate was lowering the bond yields. They clearly failed on this, both trying with tariffs and with Doge. Nothing worked so far. Also, if you follow the bromance between Elon Musk and Trump is breaking up right now. So the debt crisis, what Treasury Secretary Bessent says is, how do they solve this? They want to outgrow it, okay? So the only possible solution to outgrow it, it's not via GDP, it's via debasing the currency. And two important facts, and then I stop, that we observe is there's dollar weakness, while at the same time bond yields are rising, which should not be the case. And the second similar dynamic is gold is on a continued upward move while the real rates are elevated. This is like unheard of, and I think this all points to this like structural reserve allocation towards hard assets. So there's this hard asset pivot. Gold on central bank balance sheet is at a 30-year high. Treasuries is at a 25-year low. And I think all of these reallocation dynamics really resonate with Bitcoin.
Yeah, so you've heard it from Dominic, uncharted territories. Dominic, what's the timeline for digital assets to go up?
The timeline. I mean, we are still, at least in terms of Bitcoin, still in bull market territory. We published our outlook, basically deriving a lot of, let's say, performance predictions from different risk models, and they are telling us we should like have some form of new all-time highs latest in Q3, Q4. In our outlook, based on these risk models, we called for 180K this year. And maybe 120 might be in the books in the next couple of weeks or months, but no financial advice. All
right, very good, very good. Yeah, so you've heard it from Dominic, bullish on Bitcoin. How about alt season? Are we going to have an alt season?
It's actually quite a complicated question because there is that sentiment and psychological effect where the smaller cap, higher beta assets move faster in a hype cycle, and that happens in all asset classes. And market psychology is fairly reliable and predictable in that regard. But I think the nature of the alt season could be really very different from previous. Yeah. And anybody who remembers the ICO boom alt season, if you said blockchain, crypto something, you were going up. That was enough.
True.
In the 2020, 2021 alt season, it was use cases that had real actual growth, like DeFi, gaming. You know, if you remember the daily active players of Axie Infinity and so on, they were going up crazy. And these were the use cases that were driving that alt season, and not everything that said crypto, blockchain. So already we saw that maturing. And I think now it's maybe not even maturing, but the market's kind of a bit jaded after these use cases stalled and reversed. And now the market seems to require a hell of a lot of not just growth in percent, we grew from 1 to 200% growth, but to also show absolute big numbers for user basis for these projects. And I think that's kind of a tall order still, although it could change for various reasons, which you might ask me about later. But if the alt season is hype and sentiment driven, then it's of course a bubble burst kind of a situation if it's not really very fundamentally driven. And in that case, I think it's still quite likely, I mean, we'll have to see, but that it goes into the really worthless meme coins rather than, the useful projects, because they're the fastest horse in that sort of a
Okay, I want to hear
cycle.
some examples. So what are some of the projects out there currently in 2025 that actually have traction and that you think are a fast horse or are going to be a fast horse?
Pointing to me?
Yeah, both of you.
Yeah, I mean, obviously the biggest success story, and it's no surprise, is Hyperliquid, right? They had an incredibly attractive launch. They distributed the token to holders that where they all actually saw user retention. What I fully sign up for is, back then in the ICO cycle, I feel like it was like very speculative, right? And I feel like even the altcoin market is somewhat maturing right now. We see this, if you think about the ICO era, we had like large distributions, then we went choked by the Biden era hostility, we went into these low float, high FDV tokens, like all retail got wrecked, and then we transitioned into this meme coin mania. But now with the deregulation happening in the US, I feel like more projects are keen to switch the fee, right? To trigger the fee switch. So I'm talking about there are like a lot of emerging projects where you can actually see prospects of value and growth investing, such as Hyperliquid, or you can think about Aave that also does a lot of buybacks. I think in the last month they bought back 10 million. Hyperliquid, for instance, retargets 97% of their fees into buybacks. And if you think about they are doing like 600 to 800 million in annualized fees, that's a large chunk of money. So maybe you are now ready to apply some DCF models or things like that in order to get an idea on how to value these tokens.
Yeah, so you say buybacks are a good way to actually see that a project is doing well. Actually, we did some research with Messari, and we've seen that buybacks and burns in dippins especially are positive for price to sales ratios. So not a surprise there. Katalin, give us the other side of the coin.
No,
what do you see out there?
on this one there isn't really, another side. There might have been earlier a couple of things that I would have argued with, but we have to keep going. But on this one, I'm actually really on the same side. And the changes in US regulation, which are not yet finally concluded, but we already know what their thinking is, what the direction is going, all sorts of statements on, for example, that staking is not a securities transaction, or that probably most crypto assets, as the peer said that recently, are not securities, and that they want to put into place regulation that is with feasible paths to compliance and so on and so forth. I think this goes back to that it allows projects to have reasonable tokenomic models that channel the value to the token. Yep. Previously, that was kind of impossible because you either got sued or you were scared of getting sued, yep. Or so a lot of coins traded detached from the actual fundamental economics of the project, and that relationship is now getting established, which I think is both hugely positive, and also I hope that it would also lead to the market further maturing, as in distinguishing between a valuable project, yep. and a worthless token. Yep. And I think we're headed in that direction. A couple of steps to still to take, but it's going in that direction, and I'm really optimistic about this trend.
All right, so if projects are not afraid anymore to be sued, then I would like to hear from you, what are some of your unpopular opinions? So some of the things you think about and they're like our counter trend, or you can't read them in the news, and it's something that you hold dearly to your heart?
I can start if you like. I guess some context, maybe we know this is like a super Bitcoin heavy cycle. It's kind of like this, Bitcoin is becoming a mature asset class. It like checks all important properties for institutional portfolios or portfolio allocation in terms of it's decorrelated, low volatility is coming down, it performs very attractive, right? And we also see that the ownership structure is changing, so it's tilting more into the institutional corner. ETFs are buying up a lot, like 90,000 year to date. Corporate treasury strategies soaking up 220,000 year to date. I think there's like a large demand influx. At the same time as basically the relevance of Bitcoin deepens, I fear too little people talk about the elephant in the room, which is kind of Bitcoin security budget to some degree, and also its quantum resistance, which are both topics that we might face in the next 10 years. And as we know, like Bitcoin is a highly ossified protocol, meaning it's very hard to find consensus. Think about small things that take ages to integrate. So I think, in my view, I think it's a topic that should be way more present, figuring out how to deal with it. And maybe the second, slightly unpopular opinion, I'm not like solely bullish on all of these corporate treasury strategies soaking up so much supply, because in my view, I'm not sure if all of them are like bulletproof for 50% drawdowns. They might become like forced sellers. There's some vibes of equivalency in terms of GBTC from last cycle. On the debt side, however, I think fears are overblown. I think the first step becomes mature in like 2+ years. So there's still some time, but I think there's some looming forced sellers, let's say.
Okay, so point number one, quantum security. Actually, Nick Carter agrees with you, so you're in good company on that. And for the second one, for the corporate treasury, Katalin, what is your take there?
Yeah, I actually agree. In fact, I would go even further. I think that they cause. So what they do is they channel demand for Bitcoin from sources that cannot buy Bitcoin. So they can buy equity, they cannot buy Bitcoin. It's like grayscale. It's like a conduit for demand. But I think there's a lot of risks that are completely overlooked and a lot of drawbacks. I would, I agree with what you said, and I would even add to that a couple of drawbacks. One is that the fact that a private company owns, I think just in the case of MicroStrategy, getting close to 3% of all Bitcoin ever issued. And in terms of the percent of liquid supply, way, way, way higher than that. When it gets to a point that a private company owns a huge percent of the liquid supply, it undermines Bitcoin's...
Aren't we there already?
Or maybe, like obviously we're not there yet in terms of the market, what the market is signaling, but it undermines Bitcoin's safe haven nature. At some point, it's no longer an appropriate safe haven asset. So that's one other thing I don't like about it. Another thing I don't like about it is that it's not a treasury strategy. It's an investment strategy. And because it's labeled as a treasury strategy, accumulating a lot of money, whether it's fiat money or Bitcoin money, is not what a company needs to do. A treasury needs to safeguard the cash flow, have reserves. However, Bitcoin in corporate treasuries makes a lot of sense as a small allocation of the cash reserves and insurance, same as for central banks or governments, a safe haven asset, especially in this very unstable global macro environment, right? Geopolitical, geoeconomic instability. It makes a lot of sense. And the fact that it's described as a treasury strategy actually stops treasuries from doing something that could be a huge source of demand for Bitcoin and a very reasonable use case for Bitcoin. So that's another thing that I find problematic.
So I get that it's good and bad.
Well, it has a lot of risks, and the way it's done. If it were described as an investment strategy, that would negate some of them. Also, if it stopped short of how far, I think, to me, how much MicroStrategy owns is already a big risk to the market in terms of concentration risk. Like, it's not gotten to the point yet where, it's in the public domain and central banks say, no, we're not going to do the central bank reserve because they own too much. Like, it's not in the narrative, but I already think it's too much. If we saw just a headline, nothing needs to happen, just a headline. Michael Saylor might have to, MicroStrategy may have to sell Bitcoin. It would crash the price of Bitcoin, just the headline, right? Because of the size of their holdings, obviously.
All right. I'm curious what the audience thinks about this. We have time for one question. Would like to ask something? Yeah, we have someone over there. Perfect.
currency as well. How do you see that having an impact on, let's say, like the retail investor or those, I guess, individuals amongst us who also want to be buying Bitcoin regularly and benefiting off of like the long-term safe haven investment? Do you feel like how are we now impacted by the Michael Saylors as well as by the central bank?
All right, so the question is, does retail still have a share of the Bitcoin after the corporates buy it all?
Does what?
After the corporates buy it all.
I guess for the retail investor, I think still like education is absolutely crucial. I mean, it should not have like a large impact on its fundamental properties, obviously. So say if some of these corporate treasury strategies blow up, it might just provide a nice buying opportunity for the average retail investor, I would say. At the same time, something that we observed recently, if you think about the traditional 60-40 portfolio, in our view, this is completely changing. What we did is we crafted some model portfolios where we took away some part from the equity and put it into Bitcoin with incredible results. But what is actually happening right now is that all of these long duration risks in terms of government debt, this is becoming the risk factor right now. If you check TLT, which is Bloomberg's 20-year treasury bond, it's down 50% in the last 5 years. So it's not risk-free anymore, and there's a complete change in regime where we might see like, and there's also still 7 trillion in money markets. So I think this is a huge aspect that is like not on everybody's radar yet because it's so new. So it basically for the retail investor, it's very important to have this on the radar and maybe think about at least allocating some into Bitcoin and gold. As Lynn Alden put it very nicely, she said the only allocation in Bitcoin that does not make sense is 0%.
All right, what makes sense in terms of a percentage? So 60-40 is dead for institutions, also for retail, but what does it make sense from a retail standpoint to have as percentage?
It's hard to put precise numbers here. We know what BlackRock and so forth like basically pitch. They started very conservatively with 1% and 2%. Honestly, like I'm crypto native, I'm also more risk tolerant. My allocation is way, way higher. So,
Katalin?
Just in terms of, I do see a, I guess, drawback or potential risk to Bitcoin becoming a central bank reserve, as much as that would get the price up. So I think by now, because that would get the price up, of course, it would be a multiplier on the current Bitcoin price, obviously totally reprice Bitcoin, but of course it would remove so much liquidity. And I agree with Dominic that corporations doing certain things that may blow up, that's a temporary thing. So that's kind of more a will that cause a bear market, will that accelerate a bear market kind of question. But in terms of central banks, if it goes towards gold, like status with central banks, then it will go towards gold market-like liquidity situation, which is extremely illiquid for physical gold. And then what happened is it's paper gold that has all the liquidity, but that's of course what is against the ethos of Bitcoin. That should never happen. So it could be that liquidity becomes really, really squeezed. It becomes very volatile. Again, Naiad is structurally coming down now. That could then reverse. So there are these kinds of, but I mean, we're so far from that. But if we look very far ahead, there could be, questions around that. Yeah.
Okay, so looking far ahead, watch for liquidity. This is what Katalin was saying. We have to wrap it up, but the dialogue with these two gigabrains will continue. So they're available for chats in the lobby afterwards. Thank you so much.